you very much, Mr. Chairman. I offer a sensible amendment to improve this bill. My amendment exempts from the moratorium any significant regulatory action that is specifically aimed at limiting speculation in the oil markets. Now, think of a gas pump this way. If you look at a gas pump, it's got that nozzle like that. It's actually a hold-up device. Every time our constituents pull up to the pump and say, fill it up, the oil companies are saying, stick 'em up. That's what's happening. So do we really want to tell these speculators in oil markets that we don't have any interest in stopping their speculation? Do we really want this bill to do that? Because if we do that, what we are in effect causing is we're giving the oil companies carte blanche to steal from our constituents. I am sure my friends on the other side of the aisle don't want that to happen, which is why I brought this amendment forward to help you. Today, financial speculators have overwhelmed the commodity markets and have driven out bona fide market participants who seek to reduce the risk of their investment by making offsetting investments. Excessive speculation in oil markets has come about as a result of the financialization of commodity markets. Financialization means that the prices of a commodity like oil are being set not by supply and demand, but by financial concerns and by manipulation. Financialization has increased volatility, increased prices in the futures market, and needlessly inflated the price all of our constituents pay at the pump. Stick 'em up and pay for products like heating oil. Now, let's not forget that the financial crisis of 2008 was caused in part by commodity swaps, most of which are oil swaps. In July of 2008, traders pushed the price of a barrel of oil to a record $145. The wild price fluctuation was not caused simply by changes in higher demand or by events in the Middle East. There was a worldwide recession in 2008. Weak economies usually mean weaker demand for oil, but thanks to Wall Street, that's not the case. They find a way to make a profit at the expense of consumers and businesses. For decades, bona fide commercial hedgers made up about 70% of the commodities market activity, with speculators making up the other 30%. Now the speculators make up about 70% of the activity, and commercial hedgers are 30%. Do we really want to provide an opportunity for these speculators to cause our constituents to have to stick them up again? Could I ask how much time I have remaining?
Gentleman has 2 minutes and 45 seconds.
Okay, I will yield 45 seconds to my friend.
I may not need that much time, but this is the most important provision in this bill. If we can persuade our colleagues to accept it, because we've all been victims of this rising gas price, and then they miraculously come down a little bit, and then they start going back up again, and then they come down. I congratulate the gentleman from Ohio, Mr. Kucinich, for introducing the amendment, and I'm proud, along with him, to support consumers across this country. I thank the gentleman.
I thank the gentleman. How much more time would you like? I want to continue by, and I thank you sincerely. The New England Fuel Institute published a list of 100 studies, my friends, showing the impact of commodity speculation. This is entitled Evidence on the Negative Impact of Commodity Speculation by Academics, Analysts, and Public Institutions. Mr. Chairman, I ask unanimous consent to put this in the record.
Gentleman, his request is covered under general leave.
I thank you very much. So these studies show the harms of unchecked financial speculation in all commodity markets, not just oil. And though my amendment is focused on retaining the power of our regulatory agencies to address oil speculation, the fact is that excessive speculation hampers the proper function of all derivative markets, not just energy markets. Today, the average price of gas in America is about $3.50 a gallon, higher than it ought to be, and that's because of excessive speculation. So with that, I want to reserve the balance of my time.